What is up, guys? Welcome to a brand new video. In this video, I'm gonna break down exactly, as you see in the title, how I made $100,000 in 3 weeks. Now, how many accounts did I use, what prop firm did I use, and all this we will be discussing. So this is exactly the system behind $100,000 in 3 weeks. This is gonna be my step-by-step breakdown of the supply and demand framework I use, and I will be giving you guys 2 or 3 trade breakdowns so you guys can obviously see the framework and process as well. Now, you guys can see 5,000, 4,000, 4,000. If you combine all this, it's about $11,000 to $12,000 or even $13,000 profit multiplied by 5, right, which is $65,000. And this is about $15,000 multiplied by 3, which is $45,000. Which comes around $110,000, but we just call it 100K because we're just like that. So this is lucid trading, and this is my funded futures. I've been requesting these payouts weekly, and I will show you guys these payouts as well. If we go to my flex payouts, I've already received 2 payouts, which means $9,000 each, which is $18,000 because they have a 90% profit split. Now, let me just explain to you guys a couple of things, right? Why most traders never get consistent. Now, there's a right way and there's a wrong way, and a lot of people, they don't talk about this stuff because it's stuff that they don't know. You have a lot of people online that talk and they want to educate people, but you can't educate people the stuff that you don't know yourself, right? Now, what is the wrong way or whatever? Switching between indicators and setups, which is the wrong thing. I also spoke about this in my last video where I was talking about my $1 million in payouts. If you guys haven't seen that, go to my YouTube channel. You trade every move you see, which is also wrong. No defined zone to wait for. This is what I always do. I usually pre-analyze my trades and I send them to my Discord. For example, you guys can see analysis. I literally sent the analysis up front. For example, I'm gonna give you guys this example on NQ. I was saying, look, this is liquidity, probably get into the supply, go to this demand, and that's exactly what happened. This is what I do, and I simply have to literally wait for this to get taken out, go into my supply, give my entry model, which you did right here, and then enter this trade. So I just wait for the trade to come to me, right? And then you enter based off gut feeling, which obviously is wrong. You always have to enter based off your data and based off your system and based off your entry model, and obviously blowing daily drawdown before the real setup appears. This happens to a lot of people, and I hear this from a lot of people as well. People, they trade before the actual setup comes, and when their good setup comes where they're about to hit TP, they don't even have any drawdown left to actually enter the trade with correct risk management. Now, what is the right way? One system, one time frame, one market, right? I only trade gold and NQ, but preferably just trade one pair, gold or NQ, whatever your data says is the best for you. One system, which is my supply and demand entry model system. One time frame, which is 50 minutes for analyzing, and then the 1 minute is simply for my entry model. Mark your zones the night before, which is exactly what I just showed you guys. Wait for price to come to you, exactly what I just showed you guys as well. Enter only when the model confirms, which is my entry model. And then most sessions you will have 0 trades, which is the discipline, right? Now, everything starts on the 50-minute chart. What you should look for: a valid break of structure, price pushes through a swing high or swing low with conviction, which is, I'm going to showcase that. That push creates a zone, which is either a supply or demand zone. That zone is your POI, aka point of interest. POI means point of interest if you haven't heard it before. Now, why do I use the 50-minute? In my opinion, 50-minute is the cleanest structure and the cleanest chart. High enough to filter the noise and low enough to find precise zones. This is the only time frame I use to identify supply and demand zones. Now, realistically, if you really think about it, a 4-hour chart is literally like what, 16 50-minute candles, if I'm not mistaken. So at the end of the day, it's the same thing, right? Time is just fractal. On the 1 minute, you will have 15 1-minute candles, which will make a 15-minute candle. It's literally the same, but you will just have better overview, and it will just be better, less noise, less headache, and you will just see the charts more clear. Now, what are you not doing? Which is not looking at the 1 minute for bias. Why would you look at the 1 minute for a bias? What is this? Micro scalping with 5-second entry model. I'm in, I'm out. Doesn't work like that. Not marking zones on every time frame and not second guessing levels. Just mark one level that you trust. If the entry model doesn't present and it goes through your zone, you don't get an entry anyway, so you won't hit a stop loss, right? That's why my entry model does exist. One time frame, one set of zones, everything else is noise. Here is a most simple example: break of structure, demand zone, retest, and you push up. This is exactly the thing that happened today. Now, anyways, identifying valid supply and demand zone. What is a valid cause? What causes a supply or demand zone to exist? The zone must have caused a break of structure, which is obviously what I just showed you guys here. It can also cause an internal break of structure, but it should cause a break of structure, right? Once it does cause a break of structure, price left an area and did not break a significant high or low, then the zone is not valid, right? For example, like this this is not valid, this is not a break of structure. It should actually break this low, which is a break of structure. Valid calls means valid zone, aka if it does break structure, then it is a valid zone. What would you actually select as a candle, which is the initiating candle? Mark the zone from the candle that initiated the move, not the whole consolidation before it. Hide precise zones. The more precise the zone, the cleaner the entry, right? For example, here, this candle initiated the zone, this bullish candle, as you guys can see here. We actually did bounce from here and then we went lower anyway, but we went deeper on this demand as well. But for example, supply, if you would take a supply, you would take the first bearish candle. Now I took these second two bullish candles because this was, I think, no, it was a 15-minute, but I just took it like this to be sure, because on Nasdaq after this drop, I look, didn't expect this big of a drop. I was like, look, it could bounce anywhere in this zone as long as I just take the correct zone. I'm chilling, right? Now anyways, first touch only. A zone loses strength every time price returns to it. The first touch has the highest probability, which it does, but keep in mind what is also a valid thing is the more the zone gets touched doesn't necessarily mean the zone is bad, but you would always prefer all the touches to get taken out, the zone to still get respected, and then maybe look for an entry. That would be the ideal in a zone that has many touches, right? A zone that has been mitigated many times is not good, but obviously if the case is that you sweep that liquidity at the end, then it's fine. Now what is common mistakes traders do? They mark too many zones, or they have 2 or 3 more like active zones on your chart, which is not supposed to happen. You're just supposed to have one zone. If your zone gets completely destroyed through, which is fine, right, because you didn't have an entry model, then you just look at the next zone, but you do it one by one. You just overcomplicating it for no reason. Less zones is higher conviction. You know, you have in mind that you have one zone instead of 3 zones, so you could bounce from anywhere if you think about it, but just one zone you think it's gonna bounce from here, right? Now understanding liquidity, right? Liquidity is a major part of my strategy, and I believe liquidity is the thing that moves the market. Anyone knows that at this point. Liquidity is where where all orders are sitting in the market. Fuck, I couldn't speak. Stop losses, limit ordering, and pending positions. I want you guys to think about it like this. What is liquidity, right? Now, liquidity could be buy orders, sell orders, or whatever. Don't think about it like this. Look at the chart and think, where would someone's stop loss be? Where would someone's stop loss be? Let me just give you a simple example. Where could someone's stop loss be? At this low, at this low, at this low, at this low. Now, you guys have to give examples of why it could be. Look, trendline breakout. Trendline breakout was here. You took those stop losses. Trendline breakout here, or trendline breakout here. Now, it doesn't mean every time you have these things, it's gonna get liquidity swap anyway, but you just have to think about where would people place their stop losses. If I would trade XYZ strategy, where would I place my stop loss? If I would trade support resistance, where would I place my stop loss? If I would trade double top, double bottom, where would I place my stop loss? If you look at it like that, you will see liquidity way more clear. Now, they all cluster around specific levels, as I show you guys. Price moves to these areas because the market needs the volume to fuel the next move. Now, there are 3 types of liquidity: swing highs and swing lows. You know, buy stop sit above those highs. Most people, what they do is they will literally buy stop this high, and you know, once this high breaks, we will go higher. That's what they think, and then it ends up sweeping the high and then going lower. Same thing with sell stop, obviously swing lows, and buy stops are also stop losses in futures markets. So whenever you sell, you have a stop loss. You actually, once your stop loss gets hit on a sell, you actually buy. So that means more liquidity, right? So that's also the original liquidity. The price will sweep these levels to collect the liquidity before reversing. This sweep is your signal. Now, supply, that's also why I use this on my entry model. I will show you guys the entry model as well, but that's why I use the liquidity sweep on my entry model. Now, supply and demand zones, unfilled orders sit inside these zones. When price returns to a zone, it's filling those orders. This is why zones work, not magic, just order flow. Now, I will give you guys a simple example. I don't know how true this is, and I don't care how true this is. I just use this and it works for me. When, like, let's say, yeah, banks buy and they create a demand zone, right? One time I heard that when a bank buys, they have to hedge their position. I don't know why, but it does make sense to me. And I'm not saying this is true, but this is just how it makes more sense. And sometimes you just have to kind of manipulate yourself into believing something that's not true to actually see liquidity more making sense. If a bank has to hedge, right? A bank originally wants to buy, right? But they have to hedge, so they buy 500, they sell 500. Now it pumps. Now they want price to come back to the break even, so they can close their sell break even, and then we go up. That's in my opinion the case of demand zone. Bank buys, we go up, we consolidate or whatever, then we sweep all that liquidity or whatever, and then we come back to the demand. The bank closes their sell position, which makes it a buy, right? When you close the sell position, you automatically buy, which also causes volume to pump into the market. And then obviously, because the bank is still in a buy, they want the price to go up, and banks obviously move the market, right? You would think it will go up, right? That's the most making sense to me, and that's how I actually see liquidity as well. Trick you can think about. I'm not saying it's exactly correct, and I don't care if it's correct or not. It just works for me. And obviously stop loss clusters, as I said. Inducement. What is inducement? Inducement is a trap. Early buyers or sellers take positions before the real move. Their stop losses become the fuel. Price sweeps inducement first, right, which is also in my entry model. That makes a real move from valid zone below or above it. If you're entering at inducement, you are the liquidity. Now, the most simple example of inducement is this. Fake reaction, fake break of structure. It doesn't respect the zone it should respect, which is why it's not valid. Now, the entry model. Let me get to the entry model, which is the biggest thing I'm proud of. Low key, high key. But this is what causes me to not hit stop loss many times, because back in the day I used to just low-key just enter on a demand zone randomly. But if there's no entry model, you don't know if it's gonna bounce. You could just literally catapult through. Like, imagine there's a demand zone here, it just catapults through and it doesn't even bounce for 1 second. So you just save yourself one stop loss, for example, right? Now anyways, the entry model. Step 1, price reaches my zone, 50-minute supply or demand zone. Price pulls back into that zone. We are now watching the 1-minute chart, right? Once price comes into a 15-minute zone, only a 15-minute zone, don't go in the 4-hour zone and try to enter on the 1 minute. It does not make fucking sense. You wait for the liquidity sweep on the 1 minute. This is the liquidity collection. You don't enter yet. First move is usually inducement. Then you have a break of structure, either a change of character, same thing. I call this the CHoCH Flip Entry Model, right? You have inducement first. It's like go up, you go down, you sweep that high, right? And then the low that swept that high has to get broken, and then you enter the position. It's very simple. I'll show you guys the entry model as well. Then you enter. What invalidates this setup? No liquidity before the break of structure, which means you're gonna wait. Worst case, you miss an entry. I don't mind missing an entry. Zone has already been touched multiple times. We just skip, unless obviously, as I said, you sweep all of those liquidities and still respect the zone. Take profit that was hit before you enter trigger is usually canceling the trade, because if your take profit has been hit, then there could be a reversal coming, right? Now, most simple example of this, right? We're in a demand zone. This is the fake bounce. We sweep that liquidity. This is the high that caused this low to get swept, and then you break that high and you enter the position. Very, very simple. Now then we also have the continuation model, which is something I don't really use, but to think about the continuation model is, once you know where price is going, you play the 1 minute continuation. Every valid break of structure in your direction is a potential entry. You keep adding as long as price respects your bias, right? So realistically, if you think about it, it's very, very simple. You come into this demand, right? Let's say you don't get a CHoCH Flip. Sometimes you don't get a CHoCH Flip, you simply get an entry. For example, like here, you retest this demand, you get 1, 2, 3, and then the third candle has to get broken by a fourth candle, and they have to be all three bullish, by the way. They can be bearish. Then you can enter, but I don't condone entering like this very much. I think the CHoCH Flip is way better. This is just sometimes, when you have a clean continuation on the higher time frame as well, you could enter like this. So yeah, risk management and capital protection. This is something that's very important, and this is something that I preach a lot, but I don't think people understand that as much as it should be. For example, $150,000 funding account. You withdraw $1,000 weekly, which is the bare minimum you should be doing on a $150K funded account, which is only $200 days. You make $48,000 a year, realistically, if you think about it, right? Now, blowing that account does not cost you the eval fee or does not cost you potential profit. It costs you $48,000 in future payouts. That's how you think about it. Risk per trade, I would say 0.5%, which is best. Scale to 1% only in the highest conviction setups, which is only when you have a buffer. When you're trading futures, you have a 150K account, you have a 5 to 6K buffer, you can risk 1%. But otherwise, I would just condone risking 0.5, because you have $750, that's more than enough. Stop loss always behind the swept low, obviously, or high for short, so stop loss should always be about this low. If you short, it should be above this high. It's very, very common sense. Rules, never move stop loss break even too early, which is cap. I never move stop loss or break even. Stop loss or break even is for bitches. People who move stop loss or break even either are over risking or they just don't trust their analysis. For my analysis, price can trace my entry. Never scale in from a losing position. Martingale, what are we in 2020? Fuck is that? Never trade after hitting daily drawdown limit. I mean, you can trade anyway, right? But if you want to buy a new challenge and be fucking retarded, don't do that shit. This is where your discipline gets built. Take profit at the next liquidity level. Don't get greedy. I'd rather hit 4K in profit than risking that 4K to make another 1K and not hit that 1K and then crash out. One bad week does not change the system. Do not change the fucking system. Now let me give you guys one quick breakdown before I end the video. So for example, here we are on gold, right? We can see that we have continuation bearish structure. Price came in, it just respected the supply or respected the supply. I mean, they're kind of the same anyway. We just take out this high, right? Once we did take out that high, you move to the 1 minute, right? You see there's no entry. So you wait for a retest. Retest comes. If there's no entry, you can wait for a retest on the supply, which is the same thing, right? Retest comes. Let's see if you get an entry. First liquidity sweep on this high, right? This is not a liquidity sweep, by the way, on this high. Now this low is right here. This is the low. that caused that push. But then this is the liquidity sweep. This low has to get broken because this is the high that broke this liquidity or swept this liquidity. So the low that caused the move has to get broken. Now this, I don't call this break of structure. I just call this liquidity. So what I usually will do is I'll just wait for price to re-break this low. Alhamdulillah, bless me. Now anyways, once it re-breaks a low, I will enter market execution. I won't buy stop or sell stop. And then common sense is a continuation, so should at least sweep these lows or even go lower, right? Continuation, go lower. Common sense, right? Now anyways, let's see if that trade does get filled. Now let's say, okay, you entered here, boom, shakalaka, whatever. Now all you do is wait. Now see, there is a possibility it goes to break even or it comes to a break even, but it doesn't matter. This is my trade. This is how I trade. I don't give a fuck. It could come to my break even. I ain't scared of no little drawdown. I ain't scared of little drawdown. So that's 5.5 R. I risked 500 on this trade. I made like 2,600 or something across 5 accounts. So that was like 13k. Simple. I have more breakdowns, but I share them in my Discord. It's simple. I made 100k in 3 weeks. Anyways, this is the breakdown. Hope you guys did learn something new. You know, if you want to learn my strategy, if you want to get mentored by me, someone who was over $1 million in payouts, all with proof, just apply through the website. You can always DM me on Instagram for any questions. My Instagram will also be in the link in the description. Hope you guys did like this video. Like, comment, and subscribe. Road to 10,000 subscribers. I will do a crazy giveaway. I don't know what, but I'll probably give away like something. I don't know what. Maybe $1,000 or some shit like that. I don't want to give away prop from challenges. I mean, maybe I could, but we'll see. Let's get to 10k subscribers. Like, comment, and subscribe. You know, I'm very active lately. I've been posting like crazy. Hope you guys have enjoyed, and I'll catch you guys in the next one.